Hi everybody, Ken Hines here, HFR President with the HFRX Indices mid-April 2024 performance snapshot. It's the first couple weeks of the second quarter, and we've already seen a pretty significant inflection point in change with regard to financial market performance from what we saw in the first quarter. Mostly that the first couple weeks of April, equity markets have posted sharp declines as investors have really sort of priced out a lot of the optimism with regard to interest rate increases for 2024. And you're seeing much more realistic and balanced expectations for what type of rate increases or what kind of rate decreases are going to happen over the course of the year. And so with that, you've seen pullback in equities, particularly technology-oriented equities and growth-oriented equities, as they're pricing in those less interest rate, and not necessarily higher interest rates, but less interest rate cuts, and that's obviously as a result of inflation data, which continues to be persistent. We continue to see positive hedge fund performance, which is exciting because now we saw positive hedge fund performance in the first quarter when it was a risk-on environment and equity markets were gaining, but we've also seen positive hedge fund performance in the first 2 weeks of April as equity markets have reversed. And it's interesting because some of the same trends in terms of the drivers of performance are still positive despite a significant inflection point in what's actually transpiring in the broader financial market. So we'll continue to talk about that. Continuing from the previous slide, what I was talking about with regard to the drivers of strategy performance, what we saw in the first quarter was a very strong performance from macro strategies, and that was really led by systematic quantitative strategies, but discretionary fundamental strategies also participated. First 2 weeks of March, we see equity markets reverse. We see interest rates become more uncertain as to whether or not there was going to be significant rate cuts later on in 2024. And you still see systematic macro, the HFRX macro CTA index, positive for the first 2 weeks of the month. Again, only about 1/3% positive, but that's contrasted with an equity market environment where you've seen declines of about 4.5% in large cap US equities, as shown here. And you've seen positive performance of 3 of the 4 strategies. Again, not huge gains, but positive when the market's down, which is good. Just a very different environment than what we saw in the first quarter. HFRX Equity Hedge up nearly 20 basis points. HFRX Event Driven really almost the same, about 16 basis points there. Overall global, just barely a positive, about 10 basis points for the month, and then a narrow decline for fixed income based relative value strategies. We have those down 19 basis points in the first 2 weeks of the month. Again, that compared to a risk off equity market environment where you've seen large cap US equities decline over 4.5%. Going one level deeper into the drivers of performance of the HFRX in the first 2 weeks of April, you see that that was led by systematic quantitative trend following macro strategies, up 122 for the first 2 weeks of April. We see a gain of 0.2% equity hedge fundamental growth. And that's interesting because that's an environment where that's really the area of equity markets that has reversed the most sharply, I would say, in the first couple of weeks of the month, as people have priced in less optimism about interest rate cuts for 2024. 0.5% gain in equity market neutral index. That was also a very strong performer throughout the first quarter. And again, that's typically a lower vol equity strategy because it has such a low amount of net exposure. But in the first 2 weeks, we saw a gain of 0.5% in market neutral. Again, those strategies generally have 0 or very close to 0 amount of exposure, where the drivers of performance are really just factor-based, mean reverting type strategies. And then lastly, the HFRX absolute return X gain of 42 basis points. And again, that compared with a decline in large cap US equities for nearly 4.6%. Continuing from the previous slide, really taking a slightly longer view of time, what we've seen in the first 3.5 months of 2024, leading area performance, as we've discussed, trend following systematic macro strategies, 6.25% there, which is very strong performance. And again, it's encompassed really a couple market cycles. January is relatively flat, strong risk on environment February and March, and then risk off again in the first 2 weeks of April. 3.6% gain for equity hedge, which you can see there again, that encompasses all those types of equity strategies as well. 2.6% for the overall global index, nearly 1.5% for event driven, and again, with the reversal in April, the gain for large cap US equities is down to only 78 basis points thus far for the year through the first 2 weeks of April, and then fixed income based relative value up about 0.5% in that year-to-date category. Finally, I want to drill down to the sub-strategies, strongest areas of sub-strategy performance and drivers of performance in the first 3.5 months of the year through the middle of April. You can see, as you would expect from the previous slides and the previous commentaries that we've done, strongest area, trend following quantitative systematic macro, 10 1/8% there. Very exciting performance there. And again, what's most exciting is it's really happening in different risk on environments. It's happening with different drivers of performance. We're having strong performance in commodity space, performance in the fixed income space, performance in the equity space, currency space, performance long and performance short, different commodity areas. A lot of the CTAs have been very active in cocoa futures, which, as you know, have moved a lot. Certainly oil and energy and gold have all been big contributors over the course of the year so far, 3.5 months. And like I said, we've already seen a few different market cycles. Over 6%, 6.1% gain in equity hedge fundamental. And as I said to my earlier slide, that was really an area that's reversed very sharply in April in terms of growth equities really reacting to these changes in expectations of seeing continued inflation and less expectation for interest rate decreases in 2024, sort of getting priced out of the market. Growth equities have very much responded to that, and you can still see that's really the second strongest area of sub-strategy performance first 3.5 months. Continuing from the early slide, nearly 3.5% in equity market neutral. Again, factor-based, mean reverting, very low net exposure. That has been a strong area so far for the year. And then 2.33% in fundamental value, which obviously very similar to growth, but really more of your deep value equities and less of a growth orient to those as well. But that's been a strong area, 2.33%. So that didn't move up as much in the risk on environments, but it also is a little bit less volatile when you see sell-offs like we have in the last couple of weeks. And again, as I said earlier, with the decline in the first 2 weeks of April, the overall Dow Jones declined to only 78 basis points gain thus far in the first 3.5 months of 2024. There's a lot of great information on our website, so please visit www.hfr.com. By the time you're watching this, we'll have the brand new HFR website up and available, so a lot of great, exciting new features there for you to see. If you're watching this also, you know that the YouTube channel is a great place to catch the commentaries on performance, so please subscribe to that channel, and if there are questions or other areas you'd like us to comment on or talk more about, always happy to get that type of feedback. If you want to set up a call, you can reach out to me, Ken Hines. You can reach out to indices at hfr.com to set up a call, talk about any of the aspects of performance that I talk about or any of the investability of the indices. Happy to talk about that. And then please, the Investor Guidebook is a fantastic resource for institutions that are looking and want to understand the features of investability associated with the various HFR index families and the composition of them, the methodologies, and there's a lot that goes into all of this stuff. So please download a copy of it, have a look at it, and then reach out to me if you have any questions. Please continue to subscribe to the channel, and I look forward to the next commentary, which will be coming up in the next few weeks. Thank you.